Hi there, welcome back to Buy Now Sell Now. Let's kickstart all the viewer queries on this show, and to answer all your queries, we are joined by two experts on our show today. We have Lancelot Dcunha, who's joining us. He's the Chief Investment Officer of Value X Wealth Connect LLP. He's joining us on the fundamentals. Good morning, Lancelot, and along with him, we also have Kunal, who's joining us in our studio on the technicals. Good morning to both you gentlemen. Let's kick off taking all our viewer queries then. And first up, Kunal, I will come to you because this query is coming from our viewer Kurian John, who's writing to us from Kottayam in Kerala, and he's saying he has 500 shares of Ashoka Leyland purchased at 150 rupees and 600 shares of Federal Bank purchased at 120 rupees. Should he hold both of these or make an exit now?
Yeah, I think it's a good set of stocks which you have, both of these names, and both of them have been doing reasonably well. And the good part is Ashoka Leyland, for example, the stock is nearing a break of its 200 DMA. And in this kind of a market, if it happens, then that generally indicates sign of strength for the stock. I would suggest to hold on to Ashoka Leyland as well as for Federal Bank. Also, I think the stock has been relatively very strong. Had been a late mover in the mid-cap private sector banking names in 2022-23 when the stock managed to break above the levels of 130, 140 thereabouts. But I think post that the stock has gone through a steady uptrend. So I think even at 180 thereabouts for Federal Bank, it's a stock which you can continue to hold on.
All right, moving on then. Coming to you, this question, this is sent by Shiv Kumar from Chennai. He's holding 50 shares of HUL at an average price of 2,322 rupees, holding it for more than 3 years. Should he exit or should he add more at this given current price? Because the current price has almost touched to 2,246 or thereabouts. So he wants to know, should he hold it for longer or should he sell it?
So I think he should hold it for longer because we are seeing probably the bottom of the cycle as far as FMCG is concerned, because now going forward, there is a little bit of improvement in the economic situation, as well as inflation is coming down, so that should put less pressure on people's budgets. And you also will see that with the measures by the introduced by the government on the income tax side, there could be some uptick for as far as FMCG companies are concerned. And Hindustan Unilever has been trading at a reasonable multiple. Whenever the improvement is in the earnings, we will start to see a re-rating of the stock. So I think it's a good time to accumulate some of the stock and hold it for long term.
Okay, accumulate is the call coming in from Lancelot on each show. Accumulate and hold it for the longer term based on the fundamentals of the company. Now coming back to you now, we have a viewer Satya who's writing to us. He's asking for your view on V-Guard, and he's saying if he can add or rather make a fresh entry. Even he's not specified, but he's asking your view on V-Guard. Now if I take a look at the charts, last 6 months, this stock has given quite the attractive correction. Is that a good enough opportunity to now enter or make a fresh entry into the stock and accumulate?
Well, you can start nibbling at current levels, but the stock doesn't look like that it's formed a major bottom for itself, because after last 8 or 9 days of sharp correction, what you're seeing today is more of a relief rally into the stock after that oversold nature of indicators. That process could probably take another few more days. You might see the stock heading up higher for a couple of days or at least a week or more. But then eventually, I think the stock would probably come back into a corrective phase. Generally, we see that corrections lead into at least double test or a triple test of the previous supports. That's where we see formidable bottoms being formed. So if you want to participate in this bounce, you can go ahead and look for short-term trading opportunities. But I think if you're looking at it from a long-term play, then buy on a staggered approach could be a decent strategy for the stock.
All right, that's V-Guard on the charts. But I'll come to you, Mr. Dcunha, then. This is Mohit, who's writing from Ludhiana. He says that he's got 200 shares of Star Health. He's bought it at 590 rupees per share, and his time horizon for it is 3 years. He wants your guidance. He wants to know if he should hold it or how should he play this counter.
Well, I think he should hold it, because if you look at the growth in the health insurance business, the premium has grown significantly overall. So as an industry, the premium is growing on the health side, and Star being a very focused company, because it's focused only on the health insurance space, they should see significant growth coming up on the premium side as well as on the operating metrics. So I think one should look at accumulating it at the moment, given that the price is corrected, it is at valuations a little bit reasonable, so one can accumulate and hold on to the stock.
That's the take on Star Health. Let's move on. Kunal, coming to you. In fact, the next couple of queries are coming specifically for Kunal. Kunal seems like quite the fan club you have, because Vinita from Mumbai is writing to us and she has purchased 150 shares of CDSL at a price of 1,550. She's asking technically how is this looking and how is it placed on the charts? What's your view?
So I think CDSL is something which had done exceptionally well. We've seen 2022, 23 and 24 how the stock had performed. I think the stock in 2023 was almost at 500 rupees, went up to 1900 or 2000 thereabouts. So an exceptional mover over the last 1.5 2 years for CDSL. Now what's happened is that the stock has restarted its corrective phase. Now on the weekly charts, for example, the stock has come back towards, say, closer to its 100 weekly moving average. And we've seen historically that whenever the stock completes a medium to long term correction, it tends to retest the two key averages, the 100 as well as the 200 weekly averages. So which means that there could be a possibility that the stock may come back towards, say, in the next 3 months, 4 months or so, it may come back towards retesting its 200 weekly average. That could be, say, price adjusted 1000 to 1100 kind of a time zone. So I would suggest that if you are looking to average out CDSL, then just wait out for maybe one more leg of correction if it happens over the next 1 to 3 months, and especially I think the stock comes closer to 1100 mark.
All right, Kunal, there's another fan of yours who's writing all the way from Stockholm. His name is Revant. He says that he's a big fan of Buy Now, Sell Now and of course Kunal Botra. So thank you so much, Revant, for showing your trust in our show, and of course Kunal also. But Kunal, his question is that he wants to know whether banks like HDFC Bank, ICICI Bank and Kotak Bank are they're slightly down from their nearest resistant levels. So he wants to know what are the best levels to get into it to buy, and do you still see these stocks to have a good relative strength going ahead? What's your view on these banks?
Thank you so much for that, Revant as well as Ankita. So I think on HDFC Bank, what we are seeing right now is a strategy where large cap stocks which have been holding up pretty well. So the markets are going into a phase where the earlier formidable large cap names, they are the ones which are seeing unwinding pressure right now, and the mid caps and small caps are relatively not seeing any major damage or incremental price correction. Now that's a phase of the market. I think in this phase there could be a possibility that Kotak Bank, HDFC Bank, even ICICI Bank, I think they can fall a bit more lower from a short-term play. But the nature of resilience for these stocks, what they've exhibited in the last 3-4 weeks or 3-4 months, I think that nature will stay with them. So I would believe that this could be a good opportunity in case if these stocks drop down, say by another 3 to 5 kind of a percentage point, say from current levels. That could be a very good opportunity for you, especially if you're a long-term investor.
Okay, so that's the take coming in from Kunal on banks. Lancelot, let's come back to you, and this query is coming in from Bharat Kapadia, who's writing to us from Surat, and the stock in question here is Wipro. He holds 1000 shares of Wipro at a buy price of 385 rupees per share. He's also enjoyed the bonus that the company had announced, a 1:1 bonus. Now he's saying, should he continue to hold these or time now to sell? Now he has 2000 shares, of course, after the bonus, so now he's seeing what should be done when it comes to Wipro.
So I think, while there is, some amount of global uncertainty, especially on the visa front and, how things will pan out in the US, I think Wipro is on the path to mend its business model, and, they've appointed a new CEO, and that is starting to show up in the results going forward. So I think one has to take that into account and maybe stay invested in the stock. If it does decline, then it gives you an opportunity to add, because it is a well managed company, has been successfully managed the transition, and now you are seeing growth potential coming in, especially with this new CEO coming in. So there I think it's an opportunity to hold on, wait for 1 or 2 quarters, and then one should be able to see the impact of the new change in management.
All right, with that we'll take a quick breather and we'll come back and we'll take your queries yet again, but don't go anywhere, stay tuned for that. Welcome back to Motilal Oswal Studio. You're watching Buy Now, Sell Now, where we are taking all your queries and getting them answered by our experts. And Let's resume then. We have CD Murthy who's writing in from Delhi. Now, this person holds LTIMindtree's 20 shares for 6,460 rupees. And he wants to know whether they should book loss or they should average in. And this question is for Lancelot.
LTIMindtree is a good company and it is doing well in the space. However, valuations were a little bit on the higher side. So if one is looking at it from a long-term perspective, then it makes sense to hold on to the stock because the business model is still robust. The company is growing. Yes, there were a little bit of hiccups in terms of quarterly numbers were a little bit on the lower side, but you can expect things to improve going forward. Given that the company is taking measures to improve its performance. So if one has to wait for a correction, and since it has corrected, you can look at accumulating the stock.
Okay, so that's the view on LTIMindtree. Kunal, coming to, this is a stock that a lot of our viewers have been asking for the view on this one rather. So we've been asking a lot of people about this. So I'm going to ask you this once again. It may seem like a repeated stock, but it's always good to get more opinions on this one. 200 shares of Jio Finance at 269 rupees is what our viewer Poonam Anand is holding. She's writing to us from Punjab and wants your view on Jio Financial. What's the view going ahead? Because we are getting a lot of viewer interest on this one. Is there something that stands out about this stock?
Well, it was. There was a point where Jio Financial was one of the better performing names. I think from 205 or 10 thereabouts, the low which the stock had made, it went up to almost 350, 360 plus mark. But then I think you also have to remember that when stocks change course, when trends reverse, the stocks change their characteristics and behavior quite drastically. So I think in this case, we've seen Jio Finance changing its course and trend on the downside. What we've seen is that these stocks have fallen below their long-term averages, 50-day moving averages, and even in phases of bounce back, these stocks are nowhere close to their 50 DMA, which means that the selling pressure is intense into these stocks. Ideally, a bottom formation for these stocks takes a process of time-wise consolidation. So my sense is that the stock should consolidate just around the 220 mark. If you've bought at higher levels, I would suggest that maybe averaging it out at 220 or sub 220 mark could be a good opportunity for a long-term investor.
All right, that's Jio Financial Services. Kunal, again a query for you. This is from Reema, who's writing from Mumbai. She wants to know about these banks, Ujjivan and Utkarsh, Utkarsh, and also she says that she's bought these shares at an average of 30 rupees. Now, both of them are obviously trading down. So she wants to know whether she should exit, retain, or should she hold these banks?
So I think I've seen the charts for Ujjivan as well as Utkarsh in a small finance bank, and I think both of these stocks have gone through a very consistent kind of a sell-off. I think if I'm not wrong, Utkarsh bank has seen a sell-off of almost 10 or 11 consecutive months on a trot, and the stock has fallen from 60 or 65 thereabouts towards sub 30 mark. 27, 28 is where the stock is trading right now. So there comes a point when these stocks are deeply oversold. My sense is that maybe over the next 1 or 2 months, you might expect that these stocks would probably try to bottom out, and whenever that happens, you might probably expect that these stocks gets into a very strong rally recovery. So I would suggest to just hold on to the stock as of now and wait for a point when the stocks come back into break out their previous monthly highs. And same would be the case with Ujjivan Small Finance Bank. I think recently the stock had come back closer to its 200-day moving average, and then gone to a retest of the previous lows, trading at closer to 30, which is very close to the previous lows for Ujjivan. I would suggest that hold on to the stock, and hopefully in this leg of price up move, whenever it starts off in the next 1 or 2 weeks, you might expect that the stock would scale past about the levels of 40 also.
Okay, so that's the take coming in on both Ujjivan and Utkarsh. But Lancelot, coming to you, our viewer Vignesh is writing to us from Bangalore. He's already holding stocks from the banking, pharma and FMCG sectors. He's asking, could you suggest some stocks from other sectors which would be good for portfolio diversification in the long term? So already has holding in banking, pharma, FMCG, asking what other sectors or stocks are looking good to you right now.
So I think if you want to look at sectors outside the banking, pharma and FMCG, I would look at capital goods space at this point in time because, many of these companies have sold off on the fact that the government is not pursuing aggressive capital expenditure in the budget. But most of these companies are getting good orders. There's a good order inflow. and some of them are also exporting. They're exporting overseas, so that business will continue to grow. So the companies that I find are attractively priced in this space would be Larsen and Toubro, Cummins, ABB, and Siemens. One can look at these four and add them to the portfolio, because then your portfolio becomes a little bit more, let's say, balanced in terms of having a larger representation of different sectors in the portfolio, and that would be helpful, because as and when the capex cycle recovers, you will see strong growth coming in these companies, and then the stocks would again get re-rated to reflect the growth.
All right, that's the view coming in there. But coming to you, Kunal, what would be the next probable level for Nifty? This person wants to know. The Nifty closes this week. If it closes below, it's already below 22,800 mark. So if it closes below that, which it is in all likelihood, what is going to be the strategy, and what are the next probable levels from here on?
See, ideally what happens is, and we've seen this many a times on downtrends, that whenever the index takes a pause at a particular level, 22,800 in this case, there is an attempt for the index to break below the 22,800 levels, and traders, they tend to give in, with their long positions, expecting that the markets would now start a cycle of downtrend. But then what follows immediately is a process of a bounce, and the traders who've been, trapped into a downtrend, I think they start to come back into a buying mode, and that leads to maybe a 1% kind of a recovery, 1 to 2% kind of a recovery for the index, and then comes the second round of correction. So I think if you're looking at 22,800 mark as a strong support, yes, on intraday base as well as on closing basis, we might close below this level. And if that happens, say after the process of a bounce further for the index, I would look out for 22,000, 22,200 as the next leg of support for the index, because generally we've seen that after a 3 to 4% kind of an up move, that whenever the index changes its nature or a trend, support becoming resistance. So I think in that sense, we expect at least a 3 to 4% kind of a scale down from a previous support. So 22,800, if the support gets breached, we could be looking at the next targets of 22,000, 22,200.
Okay, that's not looking good, Kunal, on the charts right now, because 22,200 is quite low from where we are, where we are on the Nifty right now, and there's already so much mayhem in the market. Let's hope it doesn't come to that. But that's the view coming in. Mr. Chatterjee, we hope that answers your question. But Lancelot, coming to you, we have our viewer Subramanian who's writing to us from Chennai, and he is upset that he's only on a 10% profit in City Union Bank and Karnataka Bank. He's saying, can he buy more shares of these counters, accumulate more at the current price? He's also asking any sign of upward movement in these shares. How are these companies looking fundamentally to you? Also, if it's a 10% profit in a market like this, do you think our viewers should just be happy with that, given the way things are going on the market right now?
So I think, if you're looking at investing in, say, banks and financial companies, over a longer period of time, while these smaller banks might give you a tactical, edge in terms of appreciation. But if you look at, at the situation we are in, where the big banks are going to be focused on reducing their net interest margins and their interest rates and improving the net interest margins, I think it's a better option to sort of book profits and move to some of the larger banks, like HDFC Bank, even a Kotak Bank has come out with reasonably good results. And if you look at the public sector space, State Bank of India did come out with very good results. And going forward with the RBI likely to drop, rates a little further, banks would be well poised to benefit both on the net interest margin space as well as on the treasury space, because many of their bonds would get, would reflect market profits, mark-to-market profits. So I think it makes sense for him to look at moving from these smaller banks, Karnataka Bank and this thing. And if he's in a profit, he's not lost out anything, rather than remaining invested there, hoping that there's something will improve.
All right, that's Karnataka Bank. But coming to you then, Kunal, this is Sita Ram Ganesh who's writing from Chennai. He wants to know, firstly, he says that he and his entire family are big fans of you. So another big fan following coming for you, Kunal, on Friday. So his question is that he is at 15% profit on HCL, which has come down from 30%. Well, that's a story of perhaps every investor in this market. He wants to know whether he should exit now or he should, what should he do with this counter, with the HCL Tech?
First of all, thank you so much for that. It's heartening to see that your entire family also, sees the channel regularly. Now, it's always said that fear of loss or a pain of profit is more painful than an actual loss. So I think, yeah, in this case, a drop from 30% profits towards 15% profits tells the entire story. But then I think what you need to see is that if you're a long-term investor, the markets have already gone through maybe a 50% to 70% kind of a major pain in terms of price correction, stock specific correction, etc. Maybe I think there could be few more weeks, few more months of downward trend on the FII flows, which could take time to reverse. But once that happens, these large cap quality names would be the first ones to make a very strong comeback. So I think I would probably expect that if you're a long-term investor and you're sitting on good profits, you're sitting with very good quality stocks, I would suggest that you just have to ride out this phase of volatility, because whenever the markets make a comeback, these large cap names and the more formidable ones are the first ones to make a comeback. Whether it's 2020, 2008, 2015, we've seen so many times that when the markets come back after a major phase of downtrend, in those cases it was bear markets. So far it's not a bear market scenario for us. But I think whenever it happens, the large caps make a very strong comeback. So I think if your portfolio has good quality names, I would suggest to stay with it.
Okay, so that's the call coming in on HCL Tech from Kunal, along with, of course, some very wise words coming in. But on that note, we'll slip into a short break, but viewers keep writing to us on the number that was flashing on top of your screen, and we'll be addressing all your queries with both of our experts just on the other side of this very short break. Hi there, welcome back to Buy Now Sell Now. Thanks so much for staying tuned with us to ET Now. Let's keep it going with all our viewer queries. And Lancelot, coming to you. Next query is coming in from a viewer, Avijit from Delhi. He's asking about if it's a good time to make a fresh entry in Trent or Dixon. Given the recent correction that both the stocks have seen, he wishes to hold both of these for the medium term, say about 1 to 2 years. What's your view on both of these stocks? Are they good additions to the portfolio, Trent and Dixon, for the next 1 to 2 years?
So, both these companies have very good business models, and they are major players in the space. So in that sense, whether it's Dixon, who dominates the assembly of all electronics, and they are expanding their product portfolio, they're expanding the number of factories that they are setting up. So there is significant growth potential in both the companies. However, one has to look at the valuations, because valuations are a little bit high at this point in time. They are factoring in a lot of upsides, and things can any kind of negative surprise can immediately see the stock sell off further. So if you are not holding any of these stocks, maybe it's a good time to start some holding. But if you're already holding, let's say, a good position in these companies, it's not wise to add more at this point in time, because valuations are a little bit stretched at this point in time. You can still wait for further dip and then look to buy them. Both Trent as well as Dixon having similar views on them.
All right, valuations a little stretched for both Dixon and Trent, and wait for a more correction to average in on those counters. That's the word coming in. But coming to you, Kunal, this one's for you. This person, Subrata, has bought ITC, and he's bought ITC at 445 rupees for 1 year, and he wants to know whether he can average in at this point. Can he get in now at the current pricing?
Well, I think there's some sort of a negative price action on the back of some expectations of news flow for ITC. That's one of the reasons why, from a zone of being an outperforming stock, all of a sudden the last 3 weeks we've seen the stock correcting from 460 levels to now, I think, on the verge of break below the 400 mark. But I believe that, I think if it dips down, say, another 20 points, 380 thereabouts, that could be a very good level to go for a buy in ITC. Rarely do we see the stock falling up by 20-25%. So I think the previous highs for ITC was around the 480-500 mark. So I think a 20% dip from those levels, 20-25% from those highs, should be considered as a good opportunity for you, especially for a long-term investor.
Okay, so that's the take on ITC on the charts. Lancelot, coming to you once again. This is our viewer Bala, who's writing to us from Chennai. He's asking about your view on whether to sell Rallis India. He's been holding it for more than 3 years now, and currently is at a loss of slightly more than 10%. So what's your view on Rallis India? And also he's asking if now SBI would be a good entry at this level. So what's your view on the fundamentals when it comes to both of these, Rallis as well as SBI?
So I think Rallis is had risen significantly and now has corrected. But if you look at its businesses, it's mostly on the agri pesticide business, and that has become challenging because a lot of players have entered the space. There is a significant amount of competitive intensity which is increasing in the space, and it is very much dependent on monsoons and how things pan out as far as rural agriculture is concerned. So at this point in time, maybe it makes sense since relatively, valuation wise, SBI offers a better opportunity in terms of risk reward. So it's a good option to maybe exit Rallis now and switch the funds into SBI. And probably with the growth that we will see in the near term, I think SBI would give better returns going forward.
All right, moving on then. Kunal, I'll come to you then. This person, Madhukar, is writing from Hyderabad, and he says that he's got 200 shares of Birlasoft. He's bought it at 650 rupees per share, and it's continuously going down. He wants to know if he should book his book loss or buy Natco Pharma if it corrects a lot.
In Natco Pharma, I would suggest to avoid, because I think that stock has just gone through a very sharp sell-off, and we've seen many a times that when stocks fall sharply on the back of news flow, etc., these stocks, they remain to a downtrend for at least 1 quarter to 2 quarters. So I would sense that maybe this could be a starting down cycle for Natco Pharma. So give it another maybe 2-3 months, let the stock show signs of bottoming out, and then if the volume patterns and the indicators they change, then maybe we can change for the stance on Natco Pharma. But for Birlasoft, I would actually believe that after a 40 to 45% kind of a correction from 850 levels to now 450, 470 thereabouts, this has actually come back into a very good support territory. I was looking at the weekly charts for Birlasoft, and the stock has actually come back towards its key Fibonacci moving averages on the weekly time frame. So I think at closer to 450 levels, I would actually be of the opinion that maybe that could be a good averaging zone or a buying zone for Birlasoft.
Okay, so that's the take coming in on Birlasoft. Lancelot, coming to you, this is again another stock that a lot of our viewers are requesting an expert view on since the demerger news is out, and I'm talking about Vedanta. We have our viewer RG Rao who's writing to us from Trichy, and he's a senior citizen, holds 100 shares of Vedanta from the Kane India days. So it's been quite some time since he's been holding this stock. He's asking if it's advisable to hold after the recent announcement of the demerger that's going to be taking place in Vedanta. Now they've got the majority creditor approval also coming in for that. What's your view when it comes to this stock?
So I think when you look at it, Vedanta is a global commodity player in terms of, they have a lot of assets in the commodity space, and they are manufacturing significant amount of commodities for globally distribution and sale. And now that they are demerging the company, I think there will be some unlocking in value that will happen. So it may be a good idea to wait and get the demerger happens. And once the demerger happens, the shareholders will get stocks of each of these demerged companies separately. And then they could look at, exiting the business that they do not want to be investing in. So it makes sense to hold on. And once the process is complete and you get shares, each business will be separate, and that would give an opportunity to move into the business that you want to remain invested in.
That's the view coming in on Vedanta, to hold the stock. But moving on from there, Kunal, this is Reshma Bhatia who's writing in. She says that in the first week of this month, she had sold 25 shares of Titan at 3,500 rupees each, and she booked her profits. Now, Titan is looking attractive to her again. She wants to know if she should buy or wait further for a price correction.
See, I think it's a bit of a touch and go, frankly, because price-wise, the stock has come back towards a major support, 3180. I think the previous year, twice the stock had managed to take support and then bounce back from those levels. But then what's happened is that in the previous two bounce backs, the stock has actually made a lower high, which means that there could be a very strong possibility that this time around the stock may actually break below the 3180 mark. And we've also seen that the stock has not gone to a higher correlation or a direct correlation with respect to the gold prices, because initially we used to see that if gold prices start to move up higher, Titan also tends to show signs of price appreciation. But this time around, we've seen the stock trading into a negative correlation, which means that there could be a possibility that 3180 could be breached for Titan, and the stock may continue to see some bit of more further correction. So I would suggest to just wait out for maybe another 1 to 2 weeks and then watch this 3180 level for Titan.
Okay, so those are the next levels to watch out for on Titan, and wait for a week or two is the word coming in from Kunal. Lancelot, coming to you, Professor GT Rao is writing to us from Visakhapatnam. The stock in question is IGL or Indraprastha Gas. He holds 100 shares of this company and he's asking, should he increase for the medium term after the announcement of the bonus shares and the dividend? Would it be a good idea to increase solely on the base of these announcements, or do you think the stock also has some fundamental merit for this viewer to go ahead and increase his shareholding?
While in the short term, the stock has actually climbed up, after these announcements. But if you look at the longer term perspective, fundamentally, yes, as a gas distribution company, they are expanding their footprint. As long as they keep getting, supply of gas, they will be able to, increase their profits and revenues. So I think the gas distribution business is a good business to be in, because it's a question of everybody needs to consume, the consumption is growing, and the margins will also be stable. So I think from a long-term perspective, one can look at, buying into the stock. Yes, the short term, if you look at after the announcement, the stock has gone up. But in the short term, if there's any minor correction, you can always add to the stock on the way down.
All right, that was the last query for the day. Lancelot and Kunal, thank you so much for taking the time out and joining us today and answering all those questions. And well, with that, it's a wrap on this edition of Buy Now Sell Now. Snehi and I will take your leave. Don't go anywhere, because Markets at Noon is up next.